All right, so today is Wednesday, October 28th. This is the end of the day review. Now, normally, when I'm showing you a chart, I'm talking about the NASDAQ 100 futures. That's what we spend most of our time in the live trading room here trading, using the adaptive entry system signals that were developed by New Cycle Trading and Analytics. We have a fair number of people who also like to trade options, and I emphasize all the time that the New Cycle Trading system, the adaptive entry system, is equally compatible for futures trading as it is options trading. I just want to show you a couple of things. If I was looking for an options trade, I might be looking at the S&P 500, which I have here on the screen in front of you. I'm actually showing you a three-pane window, 10-minute, 1 hour, which is a 60-minute chart, and then a daily chart. Now, when I'm trading options, I have to decide whether or not I'm looking for a longer term option, whether I'm looking for something that is a little further out on the horizon, in which case I might be trading a daily chart. Aaron talks about those most every morning in terms of daily crosses of the Cycle Finder Plus. And we're generally looking for an expiration that is out a couple of weeks, 2 to 4 weeks, based on the profit sweet spot matrix data that we have. But we have a lot of people who like to trade intraday options. They're day traders for options. And even if you don't have an account size that is sufficient for you to day trade and fit into the rules of being a pattern day trader, we can help you get around those rules. We can help you understand how to lock in a profit without necessarily closing your trade. So what I just wanted to share quickly with you is here's a 10-minute and a 60-minute chart. So generally, if I'm going to trade intraday options, I'm going to look for a 10-minute, 30-minute, or 60-day chart, 60-minute chart. If I'm going to trade longer term, I think there's some event coming or something that I, foresee on the horizon, some bigger move, then I'm generally going to trade a daily chart. But I just wanted to show you here real quickly as we get started. Here's a 10-minute chart on the S&P 500, and this is the cash index. You can trade options on the S&P 500, or you can use this to trade options on the ETF, which is SPY. So if you take a look at some of these moves here, and you just simply focus on the trend bias entry, those of you who are familiar with the adaptive entry system know that the second print of a new color bar indicates an entry. So back here, we had a red bar. This was on the 26th. We had a red bar, and then that bar closed red, and the next bar opened red. That qualifies as a short entry. And so here's a trend bias trade that you could have possibly gotten into when the stock was trading around 34, 35, and then your actual exit here was when the first white bar printed, and that closed out of the trade around 33.82. So if you're in at 34, 35, and you're out somewhere around 33.82, you've got about a 50 to 60, you've got about a 60 point move. And if you're trading options and you're trading an at the money option, that's a 50 delta. So you've got about 50% of that move, which is, let's just say, 25 to 30 point profit. And on one contract in one day, that's a $2,500 to $3,000 profit. Now, there are some other moves that didn't move, some other signals that didn't move quite as much. You can see that you would have been long here, you would have been out here, a little bit of choppy here, you're long here, moved up a little bit, you're out here, not a significant profit. But generally, when you're trading options using the adaptive entry system, you're looking for the trend bias and trend continuation signals. So you're going to work your way through some of this choppiness, this non-productive sideways movement for the right to participate in these types of moves. So if you didn't mind holding overnight, there was actually a trade that you could have gotten into right at the end of the market day on yesterday. And then, of course, you'd be short at 33.90, and this morning it opened at 33.42. Your actual exit here was at noon today, so you're opening right at the end of the day yesterday. Your exit is at noon today, and once again, you're short at 33.90, and you're out at 33.04. So about an 85 point move. And of course, if you're trading a 50 delta, that's about a 40-point profit or $4,000 per single contract. And just to kind of emphasize how powerful the adaptive entry system is, if you decided not to take that and you decided just to take the trade, kind of view this as a fresh start, take the trade at the open of today, you've still got a very, very reasonable profit here. There's another opportunity at 1240. Again, this is all off of a 10-minute chart to take some smaller amounts of profit, but you're really trading options for some of the bigger moves. And it gives you the latitude, if you go out a couple of days expiration wise, not to have the immediacy of the resolution of the trade that you really have to have with futures. You're either going to be stopped out on your futures trade or you're going to take a profit. So options trades give you a little bit more time to take a look at that. Just one last thing here we'll look at. We'll look at the 60-minute chart, and you can see that the same thing holds true. You can go all the way back here to wherever you want to look and look at the adaptive entry system signals. Here's a signal to go long. It's the second blue bar. This bar closed blue at, that was the 9:30 bar on October 5th. So the 10:30 bar opens blue. Now you've got a qualified entry to go long, and you're in that trade until this bar opens white, or until you've reached a level of profit that you'd be satisfied with. You'd be back in long here. That's a really nice ride up. Now, you can make decisions not to hold overnight. You can get out of the trade when you've reached a satisfactory profit. Here's another opportunity to get in and go short, moved against you a little bit, but if you build a little bit of time into your expiration, that shouldn't be a huge deal for you. And then you'd have an opportunity to either get out the next day or possibly for a smaller profit when the bar opens white. So my point in emphasizing this to you is if you pay attention to the adaptive entry system as we trade the NASDAQ 100 futures throughout the day here in the live trading room, you know that this is a sequence of signals that we trade all day long. But now I've expanded out to looking at a 10-minute chart. I've expanded out to looking at a 60-minute chart, and I'm looking at the S&P 500 cash index. And I really want to emphasize that the adaptive entry system is named that because it is adaptable to most any signal, any stock, index, ETF, or futures contract that you choose to trade, and the method for trading it is pretty much the same. So you can take advantage, especially of the trend bias signals. If I was trading options on a regular basis, I personally would be focused mostly on the trend bias signals. And you can see here on the 60-minute chart, that's all I'm showing is the trend bias signals as well as the continuation signals. For my 60-minute chart options trading, I'm not showing consensus signals and I'm not showing momentum signals, but all of that is at your discretion. So just wanted to share that with you before we got into covering what our today's performance was like. Because I think in the coming weeks, we're going to have some nice opportunities, both intraday on futures, as well as intraday and longer term time frame on options, if you are interested in trading options also. All right, so for today, now we trade the NASDAQ 100 futures. We trade a 5-minute chart. We take the signals throughout the day, and then what we do is we log them into our tracking tool right here. And we generally consider activity from 7 a.m. on. So the first trade today after 7 was at 7:25, and we do a great job, Aaron does a great job of coding what the strategy was, what the performance was, profit or loss on the trade, what the amount of the drawdown was. And you can now look at this detail. We have a lot of people in our community that like me to scroll through and show the details so that they can go back and compare to their own trading. So now you have that, and more importantly, what I like to see then is what's the summary for the day. We track 2 categories in order to demonstrate for you how effective the personal trading plan is in being able to forecast what a 12-month income could be from your trading business. The 2 primary categories that we focus on, and you're not limited to these 2, and I'll tell you more about that in just a minute, but the 2 primary categories that we focus on are trading from 9:30 to noon and taking all of the adaptive entry system signals. And the other category is trading from 7 a.m. Eastern to 4 p.m. Eastern and taking the trend bias trades plus the continuation trades. So those are all trend aligned trades. There is another category that we keep an eye on. We don't specifically translate that performance into a personal trading plan because the purpose of our doing the personal trading plan is to show you how it works, how effectively it works, and encourage you to use it for your own personal trading. So today, we actually, on the 9:30 to noon category, we lost 35 points. Each point is valued at $20 per contract. We did 11 trades, and so we'll see how that translates into our personal trading plan here in a moment. Today, on the 7 to 4 trend bias and trend continuation, we did 14.75 points. So we had some big moves, but there was some volatility in there. There was some big movements that we got stopped out on a couple of trades here for a full stop loss at 20 points. 2 trades back to back, another one up here. And prior to that, we had obviously a better day going, but that's okay. You know, what we're doing is encouraging you as part of our trading community to stop trading when your personal trading plan reflects a performance that you would be happy with. So now let's jump over to the personal trading plan, and I'll show you, if you're not familiar, exactly what I mean. So this personal trading plan is designed for you to, at the end of the day, take your performance data and plug it into the personal trading plan. And that way, at any given point in time, as you've concluded your trading for the day, you have an idea of what your income forecast is for a 12-month period based on your actual performance to date. This is a 52-week plan. We encourage every trader to use it. So the very first thing we're going to do is we're going to go over to our data entry field. So today is Wednesday, October 28th. This is the 9:30 to noon category. We lost 35 points today times $20 a point, and we're trading 3 contracts. So we had a negative 2,100 a day, and we did 11 trades and 3 contracts per trade, so 33 trades. So basically, what we did yesterday, just the reverse. So that right there, I already anticipate there's somebody thinking, well, geez, we just gave back everything yesterday. How does that work? And start getting discouraged and telling yourself a story about trading. Just hold on, because the more important story is, what does our 12-month forecast look like? And we're going to show you that in just a minute. All right, so on our 7 to 4 category, we actually finished the day positive 14.75 points, so 14.75 times $20 a point, and we're trading 3 contracts. We've scaled up to 3 contracts, so $885 positive, and 15 trades at 3 contracts per trade, so 45 contracts. By putting the contracts in, we're allocating expense of commissions and fees to our forecast, and that way it's a more accurate reflection of what we could possibly do. All right, so I'm going to jump back over to our 9:30 to noon category. Now that I have the data entered, I'm going to look at these 4 numbers right here. We have 16.6 weeks behind us, and during those 16.6 weeks, there have been 28 losing days, 28 losing days. Now, this number right here is the average of our winning days, and this is the average of our losing days. Those averages take into account the rate of loss relative to the number of weeks, so the occurrence rate. So that's factored in. So what I know with 100% confidence is that we've got 16.6 weeks behind us, and that I'm averaging 22.83 points per day on my winning days, and I'm averaging 37.8 points per day on my losing days. That's my actual run rate. So now I want to forecast going forward the balance of my 52 weeks. So I'm going to translate those performance numbers into my future forecast here, minus 37.848. Okay, so now I have my future forecast from tomorrow forward through the balance of my 52 weeks, based 100% on what my actual performance has been to date for the first 16.6 weeks. And this performance takes into account the frequency rate of losing days relative to the number of weeks, and by default, the number of winning days. All right, so what that tells me is that based on the current run rate, trading from 9:30 to noon, and trading no more than 3 contracts, I have that capped out at 3 contracts, that my income could potentially be about $161,000 over the course of this 12-month period, which started at the beginning of July. Now, I think that that's pretty strong, considering we had a losing day today. That gets a little frustrating. You start telling yourself stories about, am I ever going to make this work? And you just take a step back, plug it into your personal trading plan, and you have a forecast that is helping you understand what the total picture of your performance will look like. You started with $5,000 in this account, and we're allocating no more than 10% of the balance of the account to contracts with a cap of 3 contract max on the number of contracts we'll trade. You can change that to whatever you want. You can make that 4 contracts, and all of a sudden your income for a 52-week period would increase based on having increased from a maximum of 3 contracts to a maximum of 4 contracts. So I'm going to leave it at 3, and of course you can set it at whatever you choose, whatever you're most comfortable with. One other thing, and up in these yellow box here, you see this yellow highlight right here. This will help you understand what your income could be in a near-term future. So this 161,000 is based on 12 months, 52 weeks. But what if end of January you decided that you wanted to take some cash out and do something different with it? So you can plug in whatever date you want, and it'll give you an estimate, a forecast, so that you're not waiting a full year necessarily to realize the benefit of some of your gains. You can take some out, you can spend it. If you're trading full-time as a business, you can live on it, and you can plan basically the financial forecast for your business. When you do take money out or add money, you can put that over here in column Q, and it will take that into account then for your future forecast. All right, so let's jump over to the 7 to 4 category. We've had 17 losing days in 16.6 weeks, so we're almost right on pace, to be 1 losing day per week, which is what the original plan for the personal trading plan is. And factoring that in, we have a positive run rate of 35.96, which I'm going to put in here for my future forecast. And we have a loss run rate of minus 22.13. Okay, so now based on the forecast being tied perfectly to our actual run rate and limiting ourselves to no more than 3 contracts, the forecast for income is $372,728. Again, having started with $5,000 and limiting the number of contracts we trade to no more than 10% of the balance of the account based on the margin requirement for those contracts. Again, I can increase this to whatever I choose. If I want to trade a maximum of 5 contracts, I can certainly do that. That is at each trader's discretion. This is your personal trading business, and you should trade as conservatively or not, as you choose. We do have a limiter in here, meaning I already told you that the number of contracts that present themselves for you to trade will never be more than 10% of the balance of the account. No matter what you put in here. I could put 100 in here, and it won't scale up to 100 until I have sufficient money in the account, so that the margin requirement on 100 contracts, which would be insane, is such that it would be no more than 10% of the balance of the account. So you can put whatever you want, and then you can use this as a secondary limiter. 5 contracts, I think, is very reasonable to trade. If you're a very confident trader, you have some experience and you know what you're doing. I think personally 3 contracts, if you're trading in this category, for 372,000, having started with 5,000 is pretty solid, pretty reasonable. So let's jump back to the averages. So, well, I'm going to look at the monthly summary here real quick. October is coming to a close here. Just have a couple more days, and you can start to see the number of points that we're earning in October relative to the point production in prior months. This is a new feature that Aaron has added. So it's still a work in progress, but the averages per month are valid right here. So it's reasonable in the 7 to 4 category, trading the trend bias signals, to earn 632 points per month, and over here 335 points per month. And you're going to see the range here. This also kind of helps understand when you look back and go, geez, it really felt like that period of the year was a bit more challenging, or that period was really easy. And you can see that there's a fairly big difference between the high that we've seen so far of 631 points and the low that we saw in September of 120 points. And I expect that we're going to continue to see, a range of high and low. Maybe these are the highs and lows that we'll see as we go through our 12-month plan, or maybe we'll see higher highs or lower lows. I don't know. But one of the things I do like about having this monthly summary is we do not have a monthly period yet that we've experienced loss. So we have losing days. We might even have losing weeks. Haven't really dug into that. But we don't have a month that we've had a losing month trading the adaptive entry system in these two categories. And then one of our favorite categories, which is kind of the optimum combination of time frame for trading as well as taking all of the adaptive entry system signals, you can see the range of point production here each month from, we're actually kind of on the low end of our range, having been up around 1,700 points in June, 1,500 points in July. So looks like we're going to finish somewhere around 900 points. We got a couple of days here. But just pause for a minute, folks. If you're looking at this, or you're questioning, should you trade, or if you're a trader and you're thinking about maybe getting involved or learning a little bit more about this, I can't guarantee this going forward, but we're 2 days shy of the first 5 months of doing our tracking, not testing the adaptive entry system. We did an extensive amount of testing before we released this to our community, but we don't have a losing month yet. And that is, I think, a pretty powerful statement for 5 months. It's just a matter of taking the signals, continuing to trade the signals, and being diligent about what you do. And then jump over to the averages. The 7 to 4 category, taking the trend bias and trend continuation signals, we're averaging $652 a day per contract. That's based on the past 97 trading days. And the 9:30 to noon category, taking all of the signals, is averaging $346 a day. And our optimum category is averaging about $1,257 a day. That's trading from 7 to 4, all signals. Aaron built this feature in here, as most of you already know, where we can select any combination of signals and categories, and then we can select whatever time frame you might like to see. And we did that, she did that, because we have a lot of people in our community who don't want to trade all day or don't have the ability to trade all day. I remember recently somebody said, hey, listen, I'd like to trade from 6 to 9, and then I have a job to go to. So we were able to show, what 6 to 9, if I just put in here, just to kind of show you 6 to 9 a.m. And we can very quickly and easily say, well, based on what we've seen for the past 97 trading days, it looks like you could average around $612 a day per contract. And based on, again, our history, there are 14 losing days if you're trading that 6 a.m. to 9 a.m. time frame. And that's based on trading all of the signals, including fractals. If you just wanted to trade all excluding the fractals, it's a little bit less, but it's a little bit less work involved in trading also, with excluding the fractals. So lots of flexibility for us to help you understand where to focus your time, where to focus your attention. And one last thing I want to say about this is we frequently get comments from traders who say, well, you know, the momentum signal doesn't really seem to work out for me. I don't like trading the momentum signals. So if I jump over to a chart here, and I look at, I'm going to do it this way here, and I look at our usual NASDAQ 100, and I get to my 5-minute chart. Well, we will have a day where, you know, maybe there's a couple of momentum signals or consensus signals that didn't work out, and this is a natural thing, natural occurrence. Traders will start telling themselves a story that they don't want to trade that. I'm actually on the wrong one here. This is what I want right here. And 5 minutes, because this shows all the signals. So they start telling themselves a story. Well, I'm not going to trade consensus signals anymore because they don't work out for me. And that really is that's a story that you tell yourself. Same thing with momentum signals or consensus signal or continuation signals. And it's usually a result of having a day where maybe you had 2 or 3 of those methods, those signals that didn't work out for you. And so you get a little frustrated because you get back and you start to lose sight of the bigger picture, which is your personal trading plan. And you start to lose sight of the bigger picture, which is the overall averages based on what we see, based on data, not the emotional impulse to say, well, I'm just not going to trade those anymore. Or somebody might say, you know, trading the market open, it just never works out for me. I don't like that. Well, that's fine. You don't have to trade it. What I'm saying, though, is if you trade the signals consistently, that's what our data is based on. The data that we've been collecting and accumulating since, well, for the past 97 days, and it will continue to evolve as we add each day to it. But this data is based on no emotional interpretation of the signal. There's no second guessing because the jobs report is coming out. There's no second guessing because earnings report is coming out on a big influencer of the NASDAQ. There's no second guessing because we're in the midst of a presidential election and that's on the horizon. There's no second guessing. It's just non-emotionally, methodically, robotically coding in the signals and coding in the performance and sharing each of those with the live trading room. Now, there's absolutely nothing wrong at all with bailing out and deciding that you want to do something different with the rest of your day if you've already hit your goal. If I back up to today and I look at the first trade after 7 o'clock, coming into that trade, now we track generally from 3 a.m., starting at 3 a.m., but we don't talk a lot about the 3 a.m. to 7. But before that 7 o'clock trade, that first 7 o'clock trade, we're up 39.5 points based on taking all of the signals. And so then if you just fast forward, by 9:30, we were up 79 points, which means we accumulated 40 points between that last trade before the 7 o'clock hour and this trade at 9:30. Well, if you're up 40 points and you want to call it a day because you met your personal trading goal, there's nothing wrong with that. And then if you scroll on down later, you can see we actually got into negative. And this isn't because we just believe you should trade, 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 trade. We don't believe that at all. What we are doing is building a database of information so that we can most accurately help you understand what the performance of any particular time frame is, what the performance of any signal is. If it was just Aaron or just Michael or just me trading, I guarantee you at 9:30 this morning, if we're up 40 points, having started at 7, we're probably done for the day. And if not, then, you know, maybe at 9:40, when you're up 94 points or, you know, minus the 40, so you're up over 50 points, having started at 7. Those are really strong numbers. And if I go back to the personal trading plan, just looking at the 2 categories that we're tracking, we need 22.83. So let's just call it 23 points positive in order to stay on pace to make $161,000, having started with $5,000. That's if I'm trading 9:30 to noon. I need, if I'm starting at 7, I need 36 points in order to stay on pace to earn $372,000, having started with $5,000. So if all of a sudden I've traded for an hour and a half, 2 hours, 2.5 hours, and I'm up 40 points, well, I've already met my goal for the day. And if I really want to invest some time in learning, I might shift off of a live trading uh, dome, the futures trading dome, and shift into a sim trading dome so that I can continue to trade, but I'm not putting real money out there. And it just helps me continue to learn and evolve my understanding of how to trade the markets. Bottom line is be wise about what you do and have a goal in mind. The personal trading plan helps to define your goal and tells you that if you achieve X, this right here is the um, probable, possible, likely result somewhere in that neighborhood. Now your numbers might change. You might have a degradation in your overall performance. That's fine. Forecast it forward and see what the overall number is. If you really don't like the degradation and you feel like you completely understand what caused that, you could increase the number of contracts by 1 and bring your future forecasted income back up to something that you would be satisfied with. All right, so that's it for the end of day review today. Thanks for staying with us and thanks for being part of our community of traders. We appreciate the opportunity to help you learn how to trade and then trade to earn throughout each day right along with us.